What's going on, everybody? Welcome back to another video. So today we'll be going over how to utilize inverse fair value gaps within your trading. So as you guys all may know, I love using fair value gaps. They're a main tool in my strategy, and I believe they can help you get better entries within the market. Make sure you stay to the end of this video because I'll show you the recording of me catching a 1 to 3 RR trade with my full team, 200 people watching me live. A ton of people made money with this trade. So to see my live entry, make sure to stick to the end. And also, if you want to trade live with me, click the first link down below. I trade Monday through Friday every single day live. So if you want to get my exact entries, follow my trading style, make sure to click that first link. Anyways, let's get into the video. So here on QQQ, we can see price made a nice move to the upside right off the open. This is Thursday's trading session. Right away, QQQ makes this impulsive move higher, 3 green candles, and we can identify a fair value gap created to the upside. Price comes down, retests into this gap. Some buyers get filled, but ultimately it makes a lower high and price breaks through with some weakness. Now, this is what we call an inversion fair value gap. So here's the theory behind it, inversion fair value gap. Okay, so let me explain this to you in the most simple terms as possible. Typically, when you're using a fair value gap, you're looking for price to continue in the direction. So for example, we have price moving to the upside, price comes down, retest into this gap, we expect buyers to get filled and price to continue higher. Same thing to the downside. Price makes an impulsive move to the downside. We expect price to come back in, sellers get filled, and have price continue down. Inversion gaps are the exact opposite. So now in this scenario, we have a bullish gap formed, but price disrespects this gap, closes below this area. Then we get a retest, and then we can look for a short entry for price to move to the downside. And now in this example, we see a fair value gap created to the downside, a bearish fair value gap formed, price disrespects it, inverses that gap, basically showing us that there is no more sellers in that area. In fact, buyers are more in control. Therefore, we look for a retest and we look for price to continue. And let me just make this clear. It's very important you don't guess when using these gaps. You need candle confirmation, retests are ideal, and the most important thing with using these gaps in general is that you need a higher time frame confluence. You need a New York session high, a New York session low to be ran into and swept, or you need some type of high time frame analysis giving you the direction to trade. Let's move back to the example here. So we have an impulsive move to the upside, a bullish gap is formed, price makes a lower high and disrespects this gap, inversing this bullish gap. Now from this point, price comes up, taps in, rejects, gets a candle closure below. Now we can look for a short entry, risking that 5-minute low and targeting previous lows, providing us with a 1 to 2 risk to reward trade. Now that price tapped into a previous New York session low and got buyers filled and pushing price higher, what else do we see? Bearish gap formed. What happens? Price comes down, retest into this area, and continues higher. So look, inversion gaps are a great way to look for entry. The best thing you could do is to stick on the 5-minute time frame and look for them retest and wait for candles to close. That will tell you the full story and also provide you with the best risk to reward possible. And now moving into today's trading session, I'll be going over the trade that we took, and also after this you'll see it live and how I took it. So we can look on the 5-minute time frame and see that price off the open was making lower highs, lower lows, lower highs, lower lows. We see a bearish fair value gap form. Okay, perfect. That's exactly what we like to see. On the 5-minute time frame, price comes up, retests into that gap, retests the 21 EMA, and starts to reject. So at this point in time, I worked down to the 3-minute time frame and I identified two things. One, I looked for a 3-minute candle close, which we got to get an entry, which was right here. Our entry was there. We risked that 3-minute high. And the other thing on the 3-minute time frame, to add extra confluence to this trade, we had an inversion fair value gap. We can see on the 3-minute, we had this bullish gap here within that bearish gap that we created on the 5-minute. So overlapping gaps with identified risk and identified reward, which was our pre-market low, of course. So that is basically how I use these gaps. It's so important to have higher time frame confluence, as I said multiple times before. If you enjoyed this video, make sure to give me a like, comment down below, and subscribe. Come trade live with me. Why not give it a shot? Appreciate y'all. Peace. I just use them as a tool because let's say, for example, we do get this pop up, we do retest these EMAs, and we have candle confirmation down. Then we can have go to risk to reward for a potential short, stop loss above, and target pre-market low. Yeah, I got in on that 3 minute close. There we go. Here's our first trim, new low of day right here. This is our first main trim. It's going to continue. It's going to hit that pre-market low. I have full confidence it will, but I'm going to get out of here anyways. So I'm going to fully exit down there. What a fantastic trade.